So for today, we're going to be talking about market structure. So what is market structure? We have three types of market structure, right? We have an uptrend, which is where price makes higher lows like this. Right? We have a downtrend, which is where price makes what lower lows and lower highs. Right? And we have the ranging market, which is where price is just being stuck within a particular high and low. So price in the ranging market, price was stuck within this high, this low, right? So this is an uptrend. So this is what a low, right? And this is what a high, and this is what a higher low, because this low is higher than the previous low, right? And this is what a higher high, and this is what a higher low, again, higher than the previous low. And again, the low makes what? A higher high. And a higher low, and again, and a higher high, and a higher low. Now, so this is what? An uptrend, right? Price is going higher, making what? Higher highs and higher lows, higher highs and higher lows. And this is what? A downtrend, where price makes what? A high, then a low, then a lower high, because this high is lower than the previous high. Then what? A lower low, then lower high, and what? Lower low, lower high, lower low, lower high, and so on. So this is what an uptrend is and what a downtrend is. While the ranging market is mostly stuck between what? A high and a low. Price is just being stuck between there. And yeah, so that's it. So how do we now use the market structure in our strategy? Do we use price doing higher highs and higher lows? How do we use that in our strategy? How do I use that in management now? Now, I use two parts of market structure in management now, which is me looking at what? What do I look at? I look at the what? The shift and the break, which is something we are going to get into right now. Shift and break, right? So when we talk about what? How the things I look at what? The shift is in structure. Shift in structure, right? And a break of structure. Now, these are the two things I look at when it comes to market structure. So, what is a shift in structure? A shift in structure is used to signify a reversal, which is when price is trending in an uptrend like this, right? And instead of this higher low that made a higher high, this higher high should what? Make what? A higher low and go higher. But instead, price what? Breaks the higher low from here. The most recent higher low, the last one, price breaks it from here. Now, once this higher low is broken, is what? That is what we call a shift in structure. Same with what? A bearish market. Yes, ma. Yeah, we have what? Now, this high made a low, and instead of what? A lower high and another low, price what does this? Now, once this one breaks, now that's what we call what? A shift in structure. It's indicating what? A shift from the bearish trend, the lower high and lower highs, the lower lows and lower highs, to what? Price actually what? Not, instead of respecting a lower high, price makes a higher high. If you check here, price has been what? Respecting higher lows. Each lows has always been higher than the previous low, which shows that what? Buyers are not willing to drive, buyers are not willing to let sellers drive price to what? The previous area. So price goes higher, higher, comes back here, right? Goes higher, then sellers drives price lower. But buyers are not willing to let sellers drive price down back to this area. Instead, they take over and buy it back higher than the last price. And then the sellers take over, drive price lower, but they don't let sellers drive it back to the last area. Then they drive it back higher again, and like that. But instead, this right now, sellers pushing price to break a higher low shows what? Less buyers dominance. So there's less dominance of buyers here, which what led to sellers breaking this higher low. And also the same thing here. Price has been respecting the lower highs being respected. No one was broken. So for price to get to break this one, to break this, simply means that what? Sellers are now having what? The weaker hands. Buyers are having the stronger hands, right? So it simply means that what? Every time price goes up here, sellers take a sell position, drive price lower than the last plot, than its last low, right? When buyers try to drive it higher, the sellers will take control and drive it even lower with, without it getting to its last high, like that. But in this case now, the sellers couldn't drive it lower. Instead, buyers drove it higher than the last high, which shows what? Sellers have gotten weaker, right? So it shows that what? There's now has been a shift from what? From sellers in power to buyers in power. And also here, a shift from what? Buyers in power to sellers in power, right? So this is what a shift in structure is. Now, what is a break of structure? A break of structure is used for what? Continuation, sorry. Shift in structure is used for reversals. Break of structure is used for continuation. So a break of structure simply means when price breaks structure, but with the direction. Shift in structure is when price breaks against the direction, right? Price is going higher highs, higher lows, higher highs, higher lows, and all of a sudden a higher low which has been protected. Because if you watch here, lows are being protected here in the uptrend. Lows are being protected. Price don't what take out the lows, but all of a sudden price takes out a low. All right, this is a shift. Now, break of structure is what? When price is making higher lows and higher highs, and price what breaks a higher high, another higher high, another higher high. So each of these break of a higher high to form a new high is called what? A break of structure, a BOS. And also on a downtrend, this break, breaking the lower low to make a new low is what? Which is with the direction, with the trend, is what? A break of structure. So when price gives you a break of structure, you wait for what? A return inside before you take your sell. You try to catch the next higher, the next lower high, right? So this is how we look at what? Breaks of structures and shift in structures. Hope it's not too confusing. Hope it's not confusing. Right? Okay.
Please, a quick question.
Okay.
Yeah, so does that mean the shifting structure deals with the body close, while the braking structure deals with the weak?
No, no, no. It deals with both of them has to do with the body close. Price closing above it is what confirms the break. It
Okay.
has to break like with the body close above. So let me make a quick example. So this like this. Okay. So this here, the breaker structure here has to be a candle from here, from this push, right? Closing above the highest point of this high, which is the wick, right? Or if the highest point doesn't have a wick, or it's a body, or it's a wick, whatever is the highest point, a body from here must close above it, right? To confirm a break of structure. And same thing, if it's a shift, when this one breaks, it must what close below the lowest point of this low. So if it's a long wick that's the lowest point of this low, price must break it with the body close. And if there's no wick, just the body, price must still close below the body. So, and if you invert the chart for the bullish example, yeah, for the other example, yeah. So when price breaks here, right, the lowest point of this area, whether it's a body or a wick, must get broken with the body close on this push to confirm a break, right? And same with the shift. So let me show you some chart examples so we can mark trends together. Let's go to the charts. Okay, let us use current gold, what where gold is currently on right now, right? So let us use here as an example. So which trend is this, right? As you can see here, gold is what? In an uptrend. You check here, what do we have here? A low, right? Then we make this high. Then we pull back, a low, high, low, high, low, high, low, high, low, high, low, high, low, high. Then this was what? A shift. The break of this area was a shift. After the shift, price what? We had a temporal downtrend. And what happens here? We had what? A high, low, lower high, lower low, lower high. Check how every high was being respected. You can see how this high here was respected by this high, right? And this high pushed lower, made a lower low, and pushed back. And what? This high was respected by this high, never got taken out. Price pushed lower, lower high again, and what? Lower low. And this time around, what happened? This is what? A shift. Price shifts from what? Bullish to bearish. I mean, from bearish to bullish, right? Can you guys see it? Let me, yeah. So price shifts from what? Bullish to bearish. And so far, we have been what? Maintaining what? An uptrend. Right? Price has been maintaining what? An uptrend. So we have been bullish. Making what? Low, higher low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and another higher high. Hope you guys are getting the point about market structure. So now, if price How would you validate a pullback? There's nothing to validate a pullback. Once price pulls back and make a new high, it's already a pullback. You don't really validate a pullback. I don't know about that. All I know is price moves like goes up, comes down, goes up. Once price in an uptrend, once price moves higher, right, and what moves inside, that's a pullback. If you make a new high, even same color candle, such as something like this, something like this is a very good example of price making high here, and then this pullback here, this week is also a pullback, right? Because if you check on a smaller time frame, you will see a proper pullback right there. And if you check while I was marking it, I marked this as a pullback. If you check the 30, there will definitely be a proper pullback, okay? Or like the 15. Okay, as you can see on the 15 minute, you can see this high, this low. Yeah, so three candle swing. I don't really deal with three candle swing. What I deal with is just the simplest stuff. You don't have to complicate anything, right? It's very simple. Just look at the simplest thing. So it should go below the low of the previous candle week. If it's a same body candle, or is that what you mean? You know, this particular example I gave you here, right? If you look the way it looks, already tell you that this is a pullback, right? Look how price made this high and the whole big rejection down here, right? You should already know that, oh, this is a very good pullback. All of these are pullbacks too, but this is what a mini trend. All of these are all pullbacks, but this is what a smaller trend. On a lower time frame, this is a what? A smaller trend, right? On lower time frame, this is what? A smaller trend. So you will have a shift in structure here, a whole sell, and a whole shift in structure back to the upside around here. Right? So I'm just marking based on what the 1 hour chart we are looking at currently. That's what I'm marking, right? Like I said, all right. So this is the area, like I was saying. All of those are mini trends. You can see how we had another trend inside of here, and what this was a shift. Once price breaks here, we shifted in structure and pulls back. Then we start making what lower highs and lower lows, and like that. Just like that. And price got here, shifted again. So it's a mini trend. There are trends inside of trends. No, I don't use indicators. I don't use indicators. I don't use indicators. Please just keep the questions first. Let me get done with what I'm saying, right? So you can ask your questions later. You can ask your questions later, please. So, like I was saying, so this is how you look at your shifts in structures. Once price does what we have a downtrend, so price will switch from downtrend to uptrend by shifting here, breaking what the last lower high. Right, once it breaks, price switches. You can see now we have what low and high and lower and higher low and the higher high and the higher low and so on. Right, so that's how price works, right? And this is what the break of structure, price breaking structure in the same direction, right? So this is what the break of structure followed by this break of structure. this break of structure, break of structure, break of structure. So as you can see, the body, the candle body, for the break to be valid, right? Price has to what? Close above the body with a body closing. And price has to close above the wick. So as you can see here, the highest point of this high, which is this wick, must get closed above with the body to confirm that what we have a higher high. And same thing here, price closes above the highest point with the body, higher high. Same thing here, same thing here, same thing here. Now, this is not a break of structure. This is not a break of structure. This one, this week, closing above this is not a break of structure, right? That's not a break of structure. It is indeed a higher high, right? Because it's higher than the previous high, but that is not a break of structure. Maybe on a lower time frame where it's closed, it's a break of structure, right? I'm not using this as a case study. I'm just using this as an illustration to show you that in case you see anywhere on your chart, price just weeks above the previous high, it's not a break of structure. It is indeed a higher high because this high is higher than the previous high, but it's not a break of structure, right? It did not break anything. In this case, as you can see, because this is hindsight, you can already see that price after going with the week, it pulls back and will make another high. So don't let that confuse you in real time market to think that when you see a week go above a high, it's a break of structure. No, maybe on a smaller time frame where there might be a close above. Yes, but on this particular time frame, like what you are looking at right now is not a break of structure. A break of structure has to what deal with the body closing above the previous high week. Right? So that's what a break of structure is. So now this is what now this is how you have what your market structure. Uptrend, downtrend, back to an uptrend again. Right? Once price shifts by breaking what the last higher low in an uptrend, price became a downtrend. Once price shifts by breaking the last lower high in a downtrend, price became uptrend again. So that's just how it works. Price becomes uptrend, goes up, takes liquidity, but we're not yet into liquidity till upper week. Right now, it's market structure. So, and we have enough time for market structure. So I'm not going to rush it. I'll calm down and teach market structure gradually because it's very crucial. So you can understand it very well, properly, right? So hope it's been understood. Hope it's been understood, guys. Anyone finds it confusing? Anyone finds anything confusing? Okay. So you can go and mark your structures, mark what your shifts and your breaks, mark shifts in structures and see how price work transitions from uptrend to downtrend after a shift. Mark your shift in structures, mark your break of structures, and what? Mark the trend. Higher highs and higher lows, higher highs and higher lows. Remember, a higher high only has to be higher than the previous high. It doesn't have to break anything. It just has to be higher than the previous high. Whether it's higher with the body or higher with the wick, doesn't matter, right? But the break of structure now is where we have what you need to have a body close above the previous high, right? And this market structure is a very broad topic because, switching from time frame to time frame, you're going to see different structures, right? So you would need to be very, very flexible and conversant with it. So I'm not going to rush market structure. We're going to go, if you check on the outline, we have 2 weeks for market structure and also 2 weeks for liquidity, right? So I'm going to go one at a time, gradually, because so you can understand it properly and how to utilize it properly across multiple time frames, how you can see the structure on this time frame and use it properly and not misunderstand the structure you are seeing, right? So we are going to cover all of it gradually, right? And to cover everything. So you will understand. But I would just want you to do right now for the stage we are on right now, just mark any time frame of your choice, right? Mark the higher highs and the higher lows, and also mark what breaks and the breaks and shifts. And also look at how price mostly transitions after a break of structure. Price transitions from a downtrend to an uptrend or an uptrend to a downtrend. Yeah. So just go around, check it, look at it, and what we'll continue in our next class. We'll also talk about what about smaller time frame market structure, like the market structure that is inside another structure, right? And how you can use that one as well. And also we're going to talk about places where it's important, right? Like, how do you know that because price has given you a shift in structure, how do you know that now it's time for you to act? How do you know that? Because you have to what look at other factors, not just higher highs and higher lows, but this is just the basics. This is the foundation of it. It's just the higher highs and higher lows that I look out for. Higher highs and higher lows, price break a higher high or break a higher low, and I'm in a trade. And I know, okay, this is a shift or this is a break of structure. And what and after that, I'm looking for my trade. Because the thing is, price would only give you a pullback after it breaks a high or breaks a low. That's when price will give you a pullback. So the best entries would come after price has given you what a break. If you are looking for continuation, the best entry is so often after price has what giving you a break of structure to the to your direction. Let me say if you're looking to buy, price gives you a break of structure to the upside, then that's the time you should what look for an entry. After your break of structure, then you look for liquidities and whatever, which we're going to talk about later. Then price pulls back and gives you an entry. And once you're in, then you know that at least your target should be at least making it to the next high, right? So let me just give you a clue of what I mean. Okay, let me give you a clue of what I mean. Now, this is what we are in an uptrend, right? And this is the 1 hour higher high, right? And price is pulling back. We want to see this is what your 1 hour higher high, right? We just had a break of structure from here. And this is your 1 hour higher high. And price is pulling back inside. And we just want to see what and we just want to see price give us what a pullback for a second entry so that we can make a new high, right? So how do we take that trade? If you scale down to a lower time frame to take this trade, what you will be looking out to see is what on the smaller time frame, you're looking out to see what. Once price gives you a shift, of course, you know that what your target is what for price to take out liquidities and start buying. So now let's say you don't act, you wait, and price takes out all the liquidities and gives you an entry from here, whatever, and start buying. So after price gives you that entry, what do you wait out? What do you wait to see? Price has given you a shifting structure, right? After your shifting structure and you buy here, where would you be targeting? After either you bought here or you cut this, right? Either one, where would you be targeting? You'll be targeting the 1 hour higher high for price to make a new higher high here. And this is what most people would call your internal and external structure, I guess. I don't know. They'll call this external liquidity or whatever. I don't know all of that. I don't like to complicate things. I just make it very easy for myself. Yeah, so you'll be targeting what price to take out this high. And someone might be thinking, why not just here? Why not here? Why not here? It's because from the higher time frame, on the bigger picture, I know that price has to what make a higher high. I'm just using what the lower time frame market structure to follow the higher time frame market structure. It might be confusing right now, but you get to understand it better with more practice and more teachings, right? I'm just giving you a clue of what I mean when I said how to use smaller time frame market structure on the big time frame market structure. Or maybe I would also give it a name, micro market structure and macro market structure. Yeah, maybe I should give it a name to make it sound more formal to you guys. Yeah. So you can see how we use the smaller time frame market structure for the big time frame. And it's the same thing again from here. Once this one pulls back inside, right, you look for the same thing. This one, same thing, just like that. It's the same thing. Same thing every time, right? Once it shifts, and it's also the same reason for if you look at the higher time frame, like 4 hours and something like that, right? You would notice the same exact thing here on if you look at the 4 hours. So that what do you notice on the 4 hour? If you look at the 4 hour time frame, you notice that what there's a different market structure playing out here. You have this. Here's a higher high. Yeah. So these are low, high, high, high. So now, when price is giving you this sell what is like a pullback, right? You use what the 1 hour, 15 minute, 30 minute time frame to what to follow it. And once you start buying, once you get a buy, you use this smaller time frame to follow it. So you take here. If you know how to take entry straight, or if you don't know how to take a straight entry, no problem. You wait for what price to give you what a shift. And after price gives you what a shift or a break of structure, you just start buying and what you use that to follow. So if you're trading on the 15 minute, you could take from here after this shift structure here, and price pulls back, you could buy here. And this is not entries. I'm just showing you the market structure and how you could use them to what use the small market structure to match up the big time frame market structure, macro and micro. So now, what's your target? The 4 hour high is your target. You know already that price has to take this out, so you're holding. And every time price pulls back, what you take, and this is how you know your directional bias is bullish. Every time price pulls back, what do? You take another buy. Anytime price pulls back, what do? You take another buy because what this is a liquidity that needs to get high, that need to get run. Maybe they call it external range liquidity. I don't know if that's what they call it, right? But for me, I'll just call it a liquidity, a high that need to get run. So same way we have what sometimes we have trend liquidities. We also have highs, swing lows, and equal lows liquidities, and also range liquidity. All of these are how we determine directional bias, right? If you have a range like this, if you have a range like this, price is stuck between two areas, right? And price then what Price is stuck between two areas, right? Stuck between this low and also stuck between this high. Stuck between this low and stuck between this high, right? And price happens to purge this low out. Once this low is out, what you just need to look for on your lower time frame is what? How do I get a shift in structure or a break in or a break of structure? Once you get that, what and you're buying, your next target should be the range high, the high of the range. So now, because you know that you have a move that's targeted at what taking out liquidity above here, your directional bias is what? Bullish. You want to buy. Same with the trend line liquidity when you have this and you want to take out all of this or compression liquidity, whatever. Once price breaks here, you know that okay, I'm buying here, target here. Anytime price pulls back, I will sell. Then you also infuse storyline into it to what to give you like let me say once you are looking for this buy and then price starts a bullish storyline, of course, price is what agreeing with you. So you're holding your buys to take out all of these liquidities. And these are also we have the equal highs and equal lows. Equal lows, yeah. Where price gives you equal lows and you're selling to take out the equal lows. So basically, directional bias, if I want to explain in the simplest term, is just what? Understanding where price is going to go based on which liquidity we get around. Finish. That's what it is. Then you use storylines to what? To back it up. Right? I'm looking for this low to get around and price starts a bearish storyline. It's more confluence for you. I'm looking for this high to get around and price starts a bullish storyline, more confluence for you on your directional bias. So this is what another. So this is how you use what smaller time frame. So on the higher time frame, all we are simply doing is what looking for a higher high to be made, right? But we are using the lower time frame market structure to follow up that. I don't know if it's clear. Is it clear? Is it clear? Any questions? We'll talk more about this now on our next class on Saturday. More about this kind of trades and market structure, directional bias more, and all of that. We'll talk more about them on our next class. Any question? Do we look for structure shift after breakout happens on one time frame below? Do you mean for storylines? One time frame below for storylines? If you have been paying attention to what I've been saying, right? Market structure and storylines are different. If a storyline could start, all right, let me say, for instance, a storyline could start here, right? And this is the high that starts this bearish storyline. And price would still go above this high. It doesn't mean that storyline has changed. As far as there was no daily reject daily and a bullish breakout, storyline haven't changed. Storyline is still bearish. And you can be selling above the high that made the storyline that started the bearish storyline. Storyline is not market structure. Storyline is simply price. It's simply like a confluence that price is giving you, a sign that price is giving you to say, wow, this is my